Good afternoon and welcome to the LSE South Asia Centre. My name is Nilanjan Sarkar and I am Deputy Director here at the Centre. I'm delighted to welcome all of you to yet another event in our series of weekly events at our Centre, today focusing on Sri Lanka. Thank you very much to those of you who attended the event last week and sent us very good and very complimentary emails to My name is Nilanjan Sarkar and I am Deputy Director here at the for the Afghanistan event. And can you hear me? Okay, great. We will now start with the event this afternoon. And before I introduce all the speakers, I wanted to say just a few words about how we brought this event together. And it's been quite a while in the making, and we are delighted that we have this panel with us this afternoon. Our event this afternoon is actually quite specific in that it focuses on the future and not the past of the topic that is at hand. All of us have seen through this year the economic and the attendant political crisis in Sri Lanka and what it has meant for the people and what are the developments that happened at that time. It has been very, very interesting. It has been very interesting for the Centre, the South Asia Centre, because in August 2020, we did another event called Brothers in Arms, which actually marked the Sri Lanka elections and the fact that for the first time in the history of the world, there were 4 brothers and a nephew who were part of a single government with very important cabinet positions that were working towards the political functioning and the governance. Now, the event this afternoon, which was planned a few months ago, has actually been very strategically located between 2 important happenings. One is an interim budget that was presented by the current president, Ranil Wickremesinghe, who is also the finance minister and was the former prime minister at the end of August and went through parliament in early September, as also the full budget, which is expected next month. And there were certain very important suggestions that were made in the interim budget that I will comment on very briefly, and I have no doubt that the panelists will comment on in greater detail. But our event is quite strategically located in between these 2 very important developments for the economy of Sri Lanka. The interim budget what happened in the context of conversations of a bailout from the IMF, or fiscal consolidation measures is the more formal phrase for it, and aims at a deficit of 9.9%, which is lower than the 12%, which was in the November 2021 budget last year, which was presented by the government that has now fallen. Now, Sri Lanka's current economic crisis, and I'm not commenting on the attendant political developments, the current economic crisis is in many ways actually quite poignant. And I use the word poignant very consciously over here. I've been thinking for the last few days about what word to use, and I use the word poignant quite consciously over here. It's because there have been some developments in Sri Lanka, certain incidents and events, which were in a sense outside the economic purview and the economic control of the country. And yet it had a devastating impact on the economy of the country. The 2019 Easter bombings, which severely affected the tourism industry, which is the 3rd largest sector for foreign exchange in Sri Lanka. In 2018, which was before the 2019 Easter bombings, between 4 and 5 billion US dollars was the income. It has about 40,000 jobs directly related to the tourism sector, all the way from hotels and airlines down to tour guides and cabbies. And just as it was recovering towards the end of 2019, by December, the figures had gone up again to about 3.9 billion, come 2020, and there was COVID and the pandemic. and more recently, the Russia-Ukraine war, which has had a bit of an impact on this. Tourism has been severely affected, and no one who has not been to Sri Lanka, those who have been to Sri Lanka will know this for sure, but those who may not have been to Sri Lanka amongst the audience, no one should underestimate what the impact of this has been on the tourism sector, nor should they underestimate the importance of the tourism sector to Sri Lanka's economy. The UK government, for instance, only in August lifted the ban on non-essential travel, and tourists from the UK rank third after Indians and Chinese, but are ahead of the Germans and the French when it comes to visiting Sri Lanka. It's poignant also because in February, we mark 75 years of Sri Lanka's independence, and it would, in all situations, be an occasion for commemoration and celebration, as I hope it will be. I earnestly hope so. At the center, we will mark it, the 75th year. So that's the reason why I use the word poignant quite consciously today. There is, of course, a longer story to it. There are those who strongly believe that this economic crisis has been much longer in the making, but most definitely from 2015, when the current president was prime minister in a coalition government, presented a set of proposals driven by economic policy, which they were then unable to get through parliament. That led to a lot of confusion and chaos in the fiscal and financial governance of the country and the decisions and so on. Come August 2020, and there were presidential elections, before which there were the elections of the prime minister, but come 2020, and there were the presidential elections. And as I mentioned just now, the Rajapaksas were back in power in full force with a huge majority, and four brothers occupied very, very important positions in this. We did an event, but by the time the crisis happened earlier this year, the four brothers left the country, though the president, that is Gotabaya Rajapaksa, has since returned to Sri Lanka. There is, of course, the wider framework of foreign investments and international debt and the attendant issues that inform Sri Lanka's economy. It was in June this year that the current president announced that Sri Lanka no longer had enough reserves to make payments. It accelerated and intensified simmering crises and difficulties that people were facing at the everyday level. And it led to a civil protest movement that eventually led to the fall of the government. Inflation rose between January and June by 50%, according to some people, and according to some others by more. But what was felt at the grassroots level was a huge shortage and restriction on fuel, petrol, diesel, which in turn skyrocketed prices. Schools were shut, workplaces were shut, and the people were quite literally out on the streets. The foreign exchange reserves had crashed, public finances have been very messy, and of course, in the international scene, Sri Lanka has missed interest payments on its loans. It has also missed principal payment. And that is where we are at the moment. Against this background, when I wrote to the individual panelists earlier in the summer, my request was that by that time, I had already attended several events where there was a lot of discussion about how and why Sri Lanka had arrived at where it was at that point. And it would be useful if we placed our event between the interim budget and the forthcoming budget and thought about possible things that Sri Lanka can do to improve the situation, what our panelists make of the suggestions in the interim budget, where they think it could go, what could one expect in the fuller budget, and what, let's say, would happen not in the next 10 years, but in the next 2 years, for instance, and what may be useful ways to overcome the crisis at the moment. We have a panel of experts this afternoon. I am far from being an expert on the subject, so I have said more than enough. And it is now my very pleasant duty to introduce the panelists But before that, may I say, give a very, very warm welcome to our audience who have joined us literally from across the globe. I have seen those who have signed up for the event, their names, their email addresses. You are literally from across the globe and along the latitude. So thank you very much. We do these events so that all of us can have useful conversations and have informed conversations and learn from experts. The event is happening via Zoom and is being live streamed on YouTube. The chat function is enabled on YouTube. You are very welcome. In fact, I would very much encourage you to ask questions to the members of the panel. If you have any, you can ask questions to an individual panelist, in which case, please mention their name. You are equally welcome to pose a question to the complete panel, and I will pose them once they have made their initial remarks and the discussion is underway. You are welcome to tweet. If you would like to tweet, then please tag us at SAsiaLSC. And two of the speakers also have individual Twitter handles, and those are mentioned in the details that you see in front of you on the YouTube screen. I should add here, and this is especially for those of you who may not have attended an on-site event at LSE or may not have attended one of our earlier events, that had this event been on-site at LSE, members of the audience at LSE events have the right to ask questions without revealing their identity. And in keeping with that spirit, when I ask questions posed by you, I will not be announcing your names, even though I know that your names, depending on how you have registered on YouTube, may be visible to others. But I will not be taking your names, and I will read out your questions verbatim so that I don't paraphrase them and add my own meaning to it. The order in which I introduce the speakers now is the order in which we've decided they will speak. Each speaker will make initial remarks for about 6 to 8 minutes, after which there will be a discussion moderated by the discussant. Anushka Vijaysinha is an economist and co-founder of Centre For a Smart Future, a public policy think tank based in Colombo. His recent work has spanned Pakistan, Iran, Myanmar, and the Maldives. Previously, he was advisor to the Minister of Development Strategies and International Trade in Colombo and chief economist at the Ceylon Chamber of Commerce. Dr. Sharmini Coorey is a member of Sri Lanka's Presidential Advisory Group on Multilateral Engagement and Debt Sustainability. Until 2021, Sharmini was Director, Institute for Capacity Development at the International Monetary Fund and holds a PhD in economics from Harvard. Dr. Ganeshan Wignaraja is Professorial Fellow in Economics and Trade at Gateway House, Mumbai, and Senior Research Associate at ODI Global here in London. Earlier, Ganeshan was Director of Research at ADB Institute in Tokyo and Executive Director of Sri Lanka's Foreign Ministry think tank. Ricardo Reis is Arthur Williams Phillips Professor of Economics at LSE and an expert in international macroeconomics, monetary and financial economics, and policy. Ricardo is also Director of the Centre For Macroeconomics here at the LSE in his department. He was awarded his PhD from Harvard, and prior to coming to LSE has taught at Columbia and Princeton. Nasir Manji is an LSE alumnus and an expert in banking and finance, chairman of Tata Motor Finance Limited and member of other corporate boards, and is chair of the senior advisory board of our center, the LSE South Asia Center. Everyone, welcome to this afternoon's event. I'm going to now invite Anushka to speak first. You have about 8 minutes.
Thank you very much, Nilanjan, and good afternoon and evening to everyone joining us from the UK and to friends and colleagues who might be watching. We know quite well by now the kind of policy missteps that got us into the current conditions here in Sri Lanka, and I think our audience might be quite familiar with the features of the current crisis. So in the spirit of the focus of the event, looking ahead, I'll point to four main areas. There's a lot we could talk about. I've decided to focus on 4 of them, and hopefully these could be springboards for the rest of the conversation with others. Some of them are more micro, and then zooming out. So the first is really about looking beyond the macro to real lives. While the shortages of fuel, cooking gas, and electricity had received a lot of attention and is easing up a little bit. I think the biggest challenge we now face are shortages in food and nutrition, and this has got less attention. Sri Lanka is now facing a malnutrition and health crisis that we haven't had in over a generation. Food inflation now at over 93%, household incomes, severely constrained, and wages not keeping up with inflation. And I would argue that we are seeing the second wave of this economic crisis. And this wave will have lasting, scarring impacts on households, especially children. I should also say on this aspect that it's especially important because the current economic crisis comes on the back of multiple previous shocks. The 2016-17 agriculture collapse due to adverse weather, the 2018 constitutional coup, the 2019 Easter Sunday bombings and the economic fallout of that, and then, of course, the COVID-19 pandemic and the impacts across the economy. So the forward-looking point here is that all of this means that any efforts at bringing economic stability should necessarily be centered around people and the impacts that are being faced by households. And I think it's quite easy, as all of us as economists sometimes where we focus a lot on the debt restructure pathway, the fiscal consolidation measures, and so on. But I think we really need to focus on this because it's not just because, it's a humanitarian crisis, but also for the future health and productivity of the workforce beyond this crisis. So the next budget really has to find substantial fiscal space and room to provide the necessary social safety nets and support for the vulnerable in a meaningful way. It can't be the same kind of sizes and scope of measures of the past. My second point is about looking beyond taxation in the fiscal consolidation effort. I feel that we made this mistake in the 2016-17 IMF program where the focus was entirely on revenue-based fiscal consolidation. It ignored the massive inefficient government spending, state-owned enterprises, misallocated investments, and it focused almost exclusively on tax. And this built up a resentment among consumers and the business community, make it easy for the Gotabaya Rajapaksa campaign to tout tax cuts as the panacea for growth, for the slowdown at the time, and then win the election. And I would argue that there must be an ambitious spending rationalization and realignment that's part of the fiscal consolidation. Revenue certainly has to do much of the heavy lifting, but it can't be the only lifting. For instance, 13 years after the end of the war, we still have a massive military budget. The Ministry of Defense still commands the largest annual budget today out of all ministries. The military runs 24 hotels across the country. There are dozens and dozens of other government institutions performing fairly obscure activities, with very little development impact. We have state-owned enterprises that have remained untouched. They're seen as sacred cows, and even now with the government on tenuous ground, I'm not convinced that these could be tackled in any meaningful way. But regardless of all that, I think the point here is that we really need to focus equal attention on the expenditure side and not, only rely on the revenue-based fiscal consolidation piece, even though that is a big part of it. My third point is something I've also struggled with as an economist because it crisscrosses between the economics and the politics. The government really needs to build confidence in its economic reform efforts. There's some progress on this being made. There's some confidence that the measures to bring in basic essentials have worked. Yes, there's a fuel ration scheme, but with some of the repurposed funding lines from the World Bank and so on, these have eased up. But I think progress beyond these basics would really depend on the confidence that people have in the government, and this can get fast eroded. So on this, it doesn't help when we have the government clamping hard on protests, on activists, using the Prevention of Terrorism Act, putting protesters under surveillance. All of this erodes public confidence in the government, and in turn affects the likelihood of public support for a reform program that, frankly, is going to be painful. So even as the government's ability to shepherd the tough reforms in this permutation of government seems limited, the only way to strengthen that hand is to build confidence in among people. And finally, the fourth point would be something that I'm closer to on trade and investment, an area that I work quite a bit on. And here, I think, is where we have a lot of potential for some quick and early wins. There's plenty of work that has been done around reforms to trade, investment, business facilitation. So the problems are well known and the solutions also well known. And I think it's about picking these up because they can deliver quicker results. Anything that helps boost exports in this kind of environment where our key markets, the UK, US, and EU, are showing signs of sharp slowdown. We already hear from our exporters in Sri Lanka that order books are thinning out for the rest of the year and early next year. So anything that can be done to support the operating environment, the business climate for exporters would be essential. And I would expect to see a lot of, hopefully, these growth enhancing reforms included in the next budget, because perhaps these are not as contentious as some of those reforms I mentioned earlier, like the big state-owned enterprise reforms. Complex tariff and tariff structure, procedural impediments at the border, exporter financing. So these are some of the things that I think we could focus on to get some results, even in this constrained reform climate. So I'll stop there. Highlighted these four areas. The first was around focusing beyond the macro to real people and those impacts. The second was the need to look beyond exclusively focusing on revenue-based fiscal consolidation to really take a hard look at expenditure, ambitious expenditure reform. The third is around building confidence and trust in the reform program, which is frankly on thin ice. And finally, on this area of quick wins that can deliver some early results to boost growth and the space for firms to operate, which is the trade and investment and business climate reforms that are well known and can be done. Nilanjan, over to you. Thanks, everyone.
Sure, great. Thank you very much, Ayushka. May I now invite Dr. Sharmini Coorey, who is member of Sri Lanka's Presidential Advisory Group on Multilateral Engagement and Debt Sustainability. Until 2021, Sharmini was Director of the Institute for Capacity Development at the International Monetary Fund. Sharmini holds a PhD in economics from Harvard University. Sharmini, please speak now. You have about 8 minutes.
Thank you very much. Thanks for inviting me for this panel. I think this is a very appropriate time, as you said. I think the crisis is clear to all of us. And one thing that I think is really important is not just to simply address the immediate needs stemming from the crisis, but also to implement measures and address the structural and political problems that frankly got us into this situation in the first place. So we need to fix our problems once and for all, so we don't end up with another crisis down the road. This is not going to end here unless we really address some of the underlying structural weaknesses. And so let me dwell a little bit on those, just very quickly on some of these problems that Sri Lanka has, which I think it's important to address. It's also, people have focused on the policy mistakes of and external shocks of the last 2 years. But however, it's really important to recognize that Sri Lanka was operating very close to the edge before that. And this was because of decades of misguided economic policies. Even at the end of 2019, that is soon after the last elections, Sri Lanka's public debt had reached almost 94% of GDP, causing the IMF to classify it as a country at high risk of debt distress. So very quickly, what are these underlying weaknesses that we need to tackle? I mean, since the 60s, successive governments have vied for votes by controlling consumer prices, providing untargeted subsidies to state-owned enterprises and creating state monopolies that restricted competition and provided jobs for supporters. Increasing resort to public sector employment, including in the military, has resulted in a large share of public sector workers in total employment. I mean, it's currently almost 1 in 4. All this was financed through subsidies and has created an unsustainable fiscal situation. We have to recognize that the persistent fiscal deficits also resulted in an overvalued exchange rate, which further inhibited exports and foreign direct investment, leading to a corresponding high current account deficits. So it's striking, for example, that exports of goods and services shrank from 39% of GDP in 2000 to 23% of GDP in 2019 and 18% of GDP in 2021. That is a shockingly low number. So we have to address some of these problems. Now, the policy response to these problems, unfortunately, was to protect domestic industries and reduce taxes and grant especially tax holidays, which were ineffective and worse, created opportunities for corruption while eroding the tax base. And this worsened the fiscal situation. So by 2021, Sri Lanka's tax to GDP ratio stood at 7.3%. It's one of the lowest in the world, despite its middle income status. So these fiscal and external deficits were initially financed through official development assistance, but after Sri Lanka became a middle income country, it has to finance itself through more costly market borrowing and bilateral government borrowing, both of which have now contributed to an unsustainable public debt burden. So that is a big structural change. We are borrowing now at market rates, but we haven't changed our habits. So even successful governments, right? Even as successive governments pursued populist policies, my view, the political system, ironically, became less accountable to the population, particularly after the 1978 constitutional reforms. Over time, state institutions and the public services have been corrupted to serve political parties and vested business interests, rather than actually serving the public. So what is the way ahead? I mean, I see 3 areas for action. Stabilizing the economy to address the immediate crisis, undertaking difficult structural reforms to achieve sustainable and inclusive growth, and reforming the political system to ensure true democratic accountability. Now, on stabilization, I think I'm largely in agreement with some of the things that the things that Anushka touched upon. The first and foremost, the fiscal deficit must be contained to put the public finances on a sustainable footing, and importantly, to stop recourse to central bank financing. The 2022 interim budget has made some important first steps in this regard. I mean, the revenue ratio has to be raised through better tax administration and tax increases. I mean, the broad-based, we need a broad-based VAT, and a rate of 15% is about at least a minimum we have to do. Higher corporate and personal taxes and elimination of tax holidays are critical. And I think we should be, even though the budget provided for elimination of tax holidays, the interim budget, we have to be very careful, because there is still, it's possible under the label of strategic development projects to give tax holidays. And we have to be very careful not to do this, because this only benefits, they're ineffective. They need to be, they also favor the rich and the well-connected and foreign investors. So, and amongst the things to improve tax administration are things like computerizing tax records and having a properly staffed large taxpayer unit. Second, the spending needs to be rationalized. And Anushka touched on this, and this is really important. We have to reduce the subsidies to state-owned enterprises to create room for higher social spending. And we can't simply say this is too difficult. We have to do it. And now is the time to do it. The automatic electricity and fuel price adjusted are needed to introduce cost recovery, based on cost recovery formulas to reflect world prices. The fuel shortage, which we're all suffering under, needs to be promptly addressed, including by allowing new fuel importers and distributors to enter the market. Cash, and we really have to protect the bottom 10 to 20% of the population with a proper social safety net. The current one is not well targeted. A cash transfer system should be really introduced to really targeted at the poorest and the most vulnerable of the population. And we have to increase spending on health and education. A third part of what we really have to do is monetary policy. It has to be tightened. We have to tighten monetary policy. Inflation's running way too high because of past monetary expansion. But so we have to keep raising interest rates, and the rupee should be allowed to float, and import restrictions need to be eliminated, because these restrictions are highly damaging to the economy. So if you have to really run a tight enough policy to enable imports to come in freely. Fourth, the stability of the financial system needs to be ensured by strengthening the capital base of banks and financial institutions. And fifth, and importantly, Sri Lanka's external debt needs to be meaningfully restructured with upfront debt relief. And this has to significantly reduce the net present value of external debt. Without debt relief, the economy cannot regain access to international capital markets and grow sustainably. Now, on the structural reform side that I mentioned, there's a lot there, but I will highlight three that for me are quite important. The first is to redefine the role of the state in the economy by limiting state activity to providing public goods such as health, education, infrastructure, and social safety nets. And also to provide transparent regulation and oversight where there's a market failure or national security is at stake. This would mean privatizing many state-owned enterprises that engage in commercial activities. For instance, Sri Lankan Airways, it's a huge burden on the public finances. It takes up a chunk, something amount to about 3/4 of what we spend on health. It also means strengthening the governance and balance sheets of other state-owned enterprises, including the 3 state-owned banks, which have been forced to lend to loss-making state enterprises. Reform of the electricity sector is especially important. And Sri Lanka's government procurement system needs to be reformed urgently to reduce opportunities for corruption. So there's a whole bunch of reforms in that area that need to be done. Second, we have to ensure the independence of the central bank. The Central Bank of Sri Lanka needs to be given the freedom to focus on achieving low and stable inflation as its primary objective through a transparent, flexible inflation targeting system. It should be prohibited from financing the government, and there should be no political interference in carrying out its mandate. And the government should not be represented in its governing structures. The central bank basically needs to be accountable to Parliament. And the legislation to accomplish all this needs to be enacted as soon as possible. Third, we have to promote growth by removing the anti-export bias in the economy. Anushka already mentioned this, and moving away from our protectionist trade policies and reforming customs to reduce corruptions and increase efficiency would be pretty important. Finally, let me touch on very quickly on reforming the political system. Corruption has become endemic in Sri Lanka, and we can't make much progress on addressing corruption unless there is political reform. And there has been discussion on abolishing the presidency, but this has been a live discussion in Sri Lanka. But it's even more important to reform the electoral system. The current system requires political parties and candidates to raise large amounts of money to win elections. However, there's little accountability to voters because the electoral districts are too large and parliamentary candidates are drawn from party lists rather than being voted directly into office. So in my view, it's important to reestablish single-member constituencies so that MPs are directly accountable to voters rather than those who fund their campaigns. Now, this is a complex topic. People have made proposals. My point here is simply that there needs to be an inclusive and consultative process for electoral reform to design a system that is appropriate for Sri Lanka and avoids the kind of political capture by vested interests that has led to the economic problems that the country faces today. So I will leave with this few thoughts, and I hope we can come back and discuss some of these at greater depth. So thank you very much, Nilanjan.
Thank you very much, Sharmini. Thank you. I hope I didn't rush you too much, but thank you very much. I'm sure we'll come back to a number of these points that you've raised. There is a question that has already come in. All of you will be delighted to know. But may I just say once again to members of the audience that if you would like to ask a question, please ask via the chat function on YouTube. Our next speaker is Dr. Ganeshan Wignaraja, who is Professorial Fellow in Economics and Trade at Gateway House, Mumbai, and Senior Research Associate at ODI Global in London. Earlier, Ganesh was Director of Research at ADB Institute, Tokyo, and Executive Director of Sri Lanka's Foreign Ministry think tank. Ganesh, please speak now. You have about 8 minutes.
Thank you very much, Nilanjan. It's a great pleasure to be back at LSE again with all of you. I want to try to speak in my remarks on two related issues. The first is to look at Sri Lanka's development reversal problem. And second, I wanted to kind of draw some lessons from Sri Lanka's debt and economic crisis for others. And so let me just start with the development reversal problem. Now, we know that debt and economic crisis can really set back decades of gains in per capita income and poverty reduction in the developing world. Now, Sri Lanka was particularly interesting because it met basic needs for a low-income country as early as the 70s, and the tragic crisis risks putting all this in reverse. Now, the indicators provide a very sobering story, and some of this has been hinting at. Per capita income is likely to fall from some $4,000 plus in 2017 to probably 3,500 if we are lucky in 2022, 2023, right? Now that's if we are lucky. It could be far worse, right? So we lose $500 to $600 per capita over this few period. Poverty, probably back at the envelope numbers say that we're going to have 750,000 additional poor in Sri Lanka at $3.20 a day in 2022. And this is going to be largely the urban areas and in the informal sector. Malnutrition has been talked about, 6 million people in food insecurity conditions. And then the really sad thing for me is outbound migration. We've had 700,000 new passports issued in the first 8 months of 2022. I was at the passport office last week, and it is horrible to see these really long queues of the skilled and young trying to leave the country. And that is really the sign of a tragic country if these trends aren't dealt with. And it comes back to this muddling along economic approach, and both Sharmini and Anushka have hinted at what we have seen. And sadly, as I look at this in the context of a global economy that's also closing, the development reversal problem in Sri Lanka could really become a reality for the foreseeable future unless some drastic action is taken. The second bit I want to mention is some of the policy lessons from Sri Lanka for others that are also looking at this. Nepal, Bangladesh, Pakistan particularly, and even Malaysia, where I was 2 weeks ago, are worrying about doing a Sri Lanka. And by the way, they have $85 billion worth of reserves. Sharmini, contrast that with the economy of Sri Lanka, and they worry about doing a Sri Lanka, right? So there are 6 lessons that I think are really interesting to avoid doing a Sri Lanka. The first is you really need to have strong macroeconomic and financial regulatory structure to mitigate the costs of a crisis. And in Sri Lanka, this rests with the central bank. And in the months before the crisis, Sri Lanka Central Bank was headed by political appointees, and the monetary board really had yes people on it. And they didn't sound the signal problem. And there was political capture as well as a lack of autonomy in an otherwise fairly professional institution, and short-term pressures came into play. So we need really this independent central bank that Sharmini already talked about. And we hope that this new central bank act that's being talked about will get actually passed in either this interim budget or the one to come. And that will also provide a culture of appointing a governor who is a capable person rather than a political hack. And we've got to make sure of that. The second is to really look at these effective crisis management capabilities. And Sri Lanka, during the crisis and even now, has had really fragmented crisis management capabilities, overlapping committees which stifle information sharing. There's a lot of infighting and there's poor decision making. And this was evident even in the time of Gotabaya Rajapaksa, and somewhat exists today, somewhat a modest improvement. We need, I think, a US-style council of president's economic advisors as a serious option, which can be very clear about what advice it follows against a set of rules, and with people who are very capable rather than hacks, independent people across the aisle. The third important lesson to take from Sri Lanka is there are gains from going to the IMF. We followed these homegrown solutions during the Rajapaksa era, and they were a mishmash which really kind of put a band-aid on a festering sore as far as the debt position was concerned in the economy. There was little benefit in discussion in government of the benefits of the IMF help. And as we all know, after you've defaulted, it's much, much harder to get creditors to agree on things. And I think that's the kind of problem that people advising the current president are facing. And China has been a real fly in the ointment in Sri Lanka's case. And the default, apart from any of this, really tarnishes the national brand for many, many years. The fourth is the safety net issue. And as we heard earlier, the British-style welfare state is really insufficient to deal with poverty and social discontent in a crisis. Now, there was a temporary rationing scheme for fuel, which was introduced rather late. I mean, outside my front door, we saw queues of people for 3 days, and they, were very orderly, but this is not a way to deal with things. And we really need these cash transfers. Now, the identification of who's poor is very difficult because the Samurdhi program, which has, I think, 1.2 million plus households in it, probably has a lot of political people put into that. And so we have no confidence in the targeting mechanism. So there's a question mark of whether we do some sort of universal transfer scheme once we have the spending adjustment, and then we claw it back from the tax system, which hopefully will be better. But we at least ensure there is universal coverage of the population, which is deeply suffering through 70, 80, 90% inflation. The fifth issue is about these structural reforms we talked about. Now, the disappointment for me with the current administration is that we don't really see a coherent reform program. And I think this program has to have some of the things that were talked about by the previous two speakers, but we really need to use it to really develop a very strong market-oriented economy with a much smaller state that was mentioned. But also, apart from the static side of that, we have to build this competitiveness to the extent that that would be competitiveness linked with our geography rather than trying to go for distant geography. And that really means working with the Indian economy, which is targeted by the IMF to grow at 7.4% a year. And I think we have to link into that cluster if we want to get the spillover benefits of Sri Lankan growth, partly through the value chain, but also through other ways in which we could occur. And I'm happy to come back to why that might be very important in the chat. And then there is this important issue of greening the economy, which I think has also been missed. Sri Lanka is very dependent on fossil fuels. And we import cars with 3.5 liter engines, and that's a fascinating thing, or we had in the past. And I think we really should look at this with public transport, as well as also focus on electric cars and electric vehicles more generally. And I think that's very important. The sixth important point is to really build honest public communications to reduce the spread of misinformation. Government have been very bad at communication. I mean, just today, we had something talked about Sri Lanka wanting to downgrade itself from the current status to a low-income economy by one minister. And then the president's office contradicts and says, no, that's not what we meant at all, right? Now, that's a wonderful example of misinformation and confusion amongst people of what this all means. So what we really need then is a good public information system staffed by media professionals leading to honest messaging. In the absence of such thing, people have gone to social media, which is good, but also has a lot of misinformation. And this is really a problem in a country like Sri Lanka. So in summary, the muddling along economic management approach, which even exists today, risks Sri Lanka in a development reversal scenario becoming a reality. And that is less than $3,500 per capita in the next 2 years. And are we going to go down to $3,000 if growth continues on a negative trend and we have an aging population and massive outbound migration? It's a really scary prospect as far as I'm concerned. Now, lots of countries worry about doing a Sri Lanka, and this sadly is a slur on a country that was once a basic needs story and once a upper middle income country, right? But really, we have to look at some of these lessons that we've all been talking about as offering food for thought for others, and to avoid doing a Sri Lanka. And I hope if Sri Lanka also adopts some of this, we could eventually come out of this crisis. Thank you very much.
Thank you, Ganesh. And thank you especially for the larger and well, not the larger, the wide-angled view. I'm going to quickly get on to us inviting Ricardo to speak. But before that, could I just say that the reason we invited Ricardo was precisely because we wanted someone to speak from a wider angle, macroeconomic perspective on this whole complicated issue of foreign investments and foreign loans. And it's not specific to Sri Lanka. It is true of other countries in the region. It is true of other countries in other parts of the world, and so on and so forth. So Ricardo will be a very good bookend to the three wonderful initial remark sets that we've had just now. And then I will invite Nasser to start the discussion. Sorry. But before that, may I once again introduce Ricardo Reis, who is Arthur Williams Phillips Professor of Economics at LSE and an expert in international macroeconomics, monetary and financial economics and policy. Ricardo is also director of the Centre For Macroeconomics at LSE, which is in his department. He was awarded his PhD from Harvard, and prior to coming to LSE has taught in Columbia and Princeton. Ricardo, please speak now. You have about 8 minutes.
Thank you very much. It's a pleasure to join you here. As Nilanjan has mentioned, I am not an expert in Sri Lanka, but I hope that my, even if somewhat uninformed comments will be helpful in framing what you have heard from the previous three speakers, as well as understanding the context in which this is happening. And so I was going to make essentially 5 comments, which is that the success or 5 observations following the mission of trying to look forward for what can happen and how to make the Sri Lanka economy recover in the next few years. And the 5 are in some ways general comments on when a country goes into the type of trouble that Sri Lanka's gone, which as in any other country are specific. All crises are really different, but in some ways they do have very common components, as one has heard from the previous speakers, and likewise the recovery from those programs as common components. And what are those 5 components or 5 comments? First, balance the fiscal. Second, free the monetary. 3, manage the external debt. 4th, political persistence of reforms. And 5th, the context in which one operates. Let me then elaborate. First, on balancing the fiscal. As the previous speakers have already emphasized, and Anushka in particular was very precise in describing this, as well as Sharmini, Sri Lanka has a large deficit, and one that is in great part driven by an absence of tax revenue. The IMF, in its last evaluation, talks about VAT, corporate income tax extension, and Sharmini went through as well several of these. And it is important to emphasize how important these are from the perspective of broadening the tax base. In a country like Sri Lanka, what stands to eyes, as well as in other countries, again, going through similar problems, is not so much the tax rates, but the fact that the tax base has an enormous place to grow. In other words, more people need to be pitching in and more activities need to be taxed if one is to sustain even a much reduced level of spending. Here, introducing a VAT really looms large as being often a reform that can, or if not a VAT, at least a final sales tax, but a VAT tends to be a quite effective way of doing it, of introducing a tax that by its very nature is broad-based because it applies to all the sales of goods and services in an economy and therefore affects and makes sure that they all pay it, as well as being a particular tax that through its features is harder to give, to yield to very narrow special interest groups, even though in introducing a VAT, one has to be very mindful of the circumstances of the country. And as much as an economic theorist, one would like to have a single VAT tax rate, having differential tax rates according to income, according to different products is often a worthwhile political compromise. Balancing the fiscal in the case of Sri Lanka and many countries comes with increasing revenue. And the way to do so with fewer distortions and in a more persistent way is, and in one that is also less, let's say, more immune to the tax holidays and favors that Sharmini mentioned, is often to go through a VAT. Number two, free the monetary. The Central Bank Act has been mentioned several times. Importantly here, and the act is part of it, is to exempt the central bank from having to continuously finance the government. This is an old lesson from economic experience, theory, from the actions of the IMF, or for the many, many programs in which the IMF has had to do, as well as the unsuccessful case of hyperinflation we see in the world. But if we are stuck in a situation, as the Sri Lankan central bank seems to be, where financing the central bank, where financing fiscal authorities is a constant necessity, it is extremely hard to ever get any control on inflation. Likewise, and related, is an exchange rate policy. Sri Lanka has suffered, and has Sharmini especially noted, from an exchange rate that is quite dissuasive and harming to the export industry. Having the exchange rate float, even if with some interventions to prevent some volatility at times, is a necessary step in order to free the central bank to focus on inflation, but also to free the export industry from some of the controls and impediments that it faces now. Freeing monetary policy, not just through Central Bank Act, but also through balancing the fiscal, but as an important part through exchange rate policy that allows the exchange rate to depreciate. In particular, Sri Lanka, not having a very large private debt burden that is denominated in foreign currency, can afford a depreciation that, for instance, Latin American countries often cannot. Third, negotiate the debt burden. And this is an important component that this one had not been, I don't think had been mentioned by the previous three speakers. With a previous debt that is bilateral, with especially China, India, and Japan looming large as very large creditors, it is difficult, and having, this was mentioned by Ganeshan, having actually defaulted, which is a quite rare event and often comes with exclusion from debt markets for a prolonged period of time, it is absolutely essential that the foreign debt is restructured, renegotiated over the next 6 months. It is hard for me to say this or to admit this, but it's hard to see how Sri Lanka by itself will be able to recover without one very important part of foreign aid, and that is, or foreign assistance, I'm sorry, aid is not the right word, or collaboration, which is in negotiating this debt. This is particularly hard in the case of Sri Lanka because of the bilateral nature of the three main creditors, and the fact that this needs to happen through the Paris Club, where political differences are very stark. But when one talks about foreign assistance, beyond obviously the IMF loan, it is this the key component that will be very important. And I hope that not just through this event and the people who are listening that are not just Sri Lanka, and that beyond the promises of support that come with very small food program aids, is that the foreign community understands that this is direly needed in a country like Sri Lanka, and that, if anything, this may serve as an important lesson and a blueprint for the stability of other countries in the region. As Nilanjan has mentioned a few times, other countries are looking to avoid a Sri Lanka moment, I think was what Ganeshan called it. But a very important component of what could put other countries in problems is the growth in bilateral loans of the last 10, 20 years, many of them coming from China. And Sri Lanka will really, the negotiation of the external debt in Sri Lanka will be a test tube, which will have truly global repercussions. And I hope it is well conducted and and it's not just well conducted, but quickly conducted, seems extremely necessary. I would also note, by the way, on the negotiating debt burden, Ganeshan was right to note that migration will put even more pressure on Social Security. At the same time, in the short term, experience of the crisis shows that removing capital controls that prevent the remittances from migrants is often a way to stabilize foreign accounts, and one that Sri Lanka, having a large population working abroad, and one that sadly will grow, but if at least it temporarily grows, Ganeshan, it can stabilize external accounts with the hope that Sri Lankans can return relatively quickly. Fourth, political buy-in or political persistence. None of these reforms would work. Central bank acts get reverted. Introduction of a broad VAT gets reverted quickly by future governments. And negotiation of debt can only help if you don't run to contract new debt. On that political persistence, Anushka already mentioned quite accurately, and I think Sharmini as well, I think the importance of looking after the more vulnerable in society during these reforms. And here, in some ways, the actions needed in Sri Lanka are, at least conceptually, relatively simple, even if in practice, perhaps very difficult. And they have been mentioned by all three of the previous speakers. Trying to help the poor by subsidizing energy in state-owned enterprises, subsidizing energy and other public services in state-owned enterprises is an extremely ineffective, expensive way of doing so, and one that risks falling down a fiscal cliff pretty much always around the corner. Instead, even if untargeted, a program of income transfers, whether in cash or in some other ways, is more effective as well as potentially less costly. But beyond that, and given constraints, moving from an untargeted transfer system to a better targeted one, and one where, as many have mentioned, there are many difficulties, but difficulties are just another word for finding solutions, not for refusing to address it, is one that is crucial. And as Anushka said, these crises are deep, and it is our responsibility to prevent long-term scars of them. And the problems in nutrition and health and education are really quite striking. And the ability to provide those transfers is urgent. And if well accomplished, could provide a political buy-in for everything else. And so hold a promise, not just from a humanitarian and a long-term perspective, but even the short term, the introduction of even starting with an untargeted income transfer system funded by the removal of the price distortions and the small open and the state-owned enterprises, that then gradually or as quickly as possible moves to a better targeted system, is the way to potentially achieve that persistent buy-in. And then finally, having talked about these four, the fifth one is the extent to which we can, fifth one is the context. And here in the context, on the one hand, Sri Lanka suffers, the Sri Lankan crisis comes in a very bad time because with the cost of energy going up in a country that imports lots of its energy, and secondly, because of a potential global recession. But as well as third, what we are seeing already from the emerging markets towards, in terms of capital flows, is right now large capital flows towards the United States following the hiking cycle of the Federal Reserve, as well as just a general flight to safety from what's perceived as uncertainty rising in the global sphere. At the same time, it is also a time where tourism is likely to rebound very quickly. And if Sri Lanka is able to at least offer a semblance of some stability and safety to tourists, it could benefit from a bounce back, if nothing else, because it can't get much worse, as I think one of you mentioned, in terms of how bad tourism has been last year. But tourism is bouncing extremely quickly. And it is only for Sri Lanka to at least offer the minimal conditions for its tourist industry to be able to receive some of those tourists, number one. And number two, in the sense that Sri Lanka right now, and the losses from the flight to safety and the increase in interest rates, which are worrying many other countries, in the case of Sri Lanka, are not such a negative shock because the country is already excluded from financial markets now, having defaulted recently. The global recession will certainly affect it, but at the same time, like Sharmini mentioned, the country doesn't export that much. It should export more, but it doesn't export that much. And so the fall in the global cycle is not going to have as much of an impact, and I think could be more than offset by the counter-cyclical movement of tourism that we're observing now. So the external context is challenging, but I wanted to end with a slight word of optimism to say that the external context between the migrant remittances and the fact that other regions in the area will suffer much more from the capital flows and the hike of interest rates, together with, and especially here with emphasis, a bounce back in tourism, lead me to at least have a little bit of hope that Sri Lanka can implement the other 5 components of what I called would be a successful reform. Thank you.
Thank you very much, Ricardo. We are beginning to race with time now, so I'm going to quickly invite Nasser to start the discussion. We have a few questions. We have 3 questions from the same person and doesn't really mention anyone's name, so I'm assuming it's for all of you, but we'll come to that shortly. I'm going to now invite Nasser Manji, who's an LSE alumnus. Nasser is an expert in banking and finance, has been chairman of Tata Motor Finance Limited and member of various other corporate boards. Nasser is also the chair of the senior advisory board of the LSE South Asia Centre. Nasser, please speak now. Nasser, you need to unmute yourself.
Thank you so much, Nilanjan. And it's wonderful that all of you accepted our invitation, and this has been very close to my heart to have the Sri Lanka discussion. What I've heard has been truly amazing in terms of the depth of the perspectives that we've had. Clearly, comprehensive economic reform. You know, Winston Churchill once said, "You never waste a crisis. It's really an opportunity." I always think back to India in 1991 when we were on our knees, literally in the same sort of situation, almost exactly the same problems. And we took that opportunity and actually turned it into something that has produced a very different economy as you see today. And I think Sri Lanka has an amazing opportunity to do that, very much that. I think Sharmini's point on a deep structural problem that's not occurred yesterday, it's been there for a while, is a very important one, because this is a sort of almost a philosophical change in how you do things. So I wanted to just ask the panel. One point would be the institutional framework, and you know, a lot of you have talked about we will need new institutions. And again, public-private partnerships probably will be a very important component of how we move forward, and dismantling the SOEs and having much more efficiency, as all of you have mentioned, in terms of how public money really gets to the poor through universal transfers. I think Ganeshan mentioned that, and so did Ricardo. So I think this, how do you see an institutional response to this? The second point I thought I'd just leave for you is, especially to Sharmini, what you make of the proposal in the interim budget to create a national agency, establishment of a national debt management agency. Do you think this is putting the problem somewhere else, or is it going to be something that can really look at the very important and the speed with which debt restructuring would have to take place, as Ricardo mentioned? And thirdly, how important is China? Because again, negotiating with China is going to be extremely important. It's about 10 to 20% of the debt, somewhere in between there. And we are not seeing anything come of that. I was just trying to see India has, I think, transferred about 3.8 billion to Sri Lanka in goods and services, etc., which has helped the trade deficit. But again, negotiating this is going to be extremely important, as Ricardo said. Can I just leave those thoughts with you?
Maybe, Nessa, I could just respond to some of, since you mentioned, asked me specifically.
Yeah.
I do think a debt management agency is a good idea, but we have to distinguish between two. One is to negotiate, as you said, importantly, Ricardo and both of you have said, you have to negotiate the current debt, restructure it. And that's going to be very difficult. And it shouldn't be a large group. It has to be a small task force that is extremely close to, at a high level, that can speak credibly for the country. That could be embedded in a new agency, or it could even be done in an ad hoc task force that focuses on it, but has to have high level buy-in, because they have to have a free hand to negotiate. The second part is looking forward. And there is where a debt management agency could be very helpful. You see, because the central bank should not be in the business of managing debt, and that has to reside in a Ministry of Finance type function, but it could be an independent agency. But the most important thing is it has to have transparency. I am very puzzled that the terms of our debt are often, and we're not alone in this, are hidden. right? We have a debt agreement with a country, with a bilateral. We don't publish what actually the services, the actual cost of the loan is. So if you have a debt management agency, that's a first step, but that agency has to have audited, accounts that show what the terms of the debt is, and that has to be reported to Parliament. I think this is really important. Debt transparency is critical, and Sri Lanka shows the signs of having not untransparent processes. So that's what I would say on that. Can I just also take the opportunity to say something about universal transfers? Sure. This has been Sri Lanka's Achilles heel. We have always given universal. Think about electricity subsidies, fuel subsidies. These are universal subsidies, and they are debilitating, and there's no justification to provide rich people. They spend far more in absolute terms on electricity, on food, on anything you name than poor people. In absolute terms, they account for a lot of the spending. Here's what I would suggest as a targeting mechanism that Ganeshan asked about. And this I owe to a group that's been doing work with Verite Research, and that is use electricity consumption. Sri Lanka has very wide electricity coverage. It's 90-something%. It's very high electricity. But if you aim it at households that consume below 60 kilowatts an hour was the threshold that come across. This is not my idea. This is theirs. But I think it's a very good practical way, because we do have information on who those households are. Now, we'd have to have some other parts to supplement it, because there's some who literally have no electricity. But there are clever ways to target. And so that's one. The other thing is I'm very nervous about going from universal systems and trying to narrow it. In any country, once you give a subsidy, it's awfully hard to take it away. So I think we have to move from this universal sort of tendency to do universal subsidies to targeted subsidies. And we do have information on our population. We're a very small country, very well connected. Almost everybody has a bank account. Almost everybody, surprisingly, has electricity. So there are ways to get at people, and we could do an ID system like India that would sort of target everybody, right? So these things are possible. That's what I would suggest.
Yeah.
Thank you.
Interesting. Yes, Ganesh.
So I want to get into this debate about universal versus targeted. And I think I agree with where Sharmini is coming. The problem with the Verite study, Sharmini, is that there is a lot of free electricity because people tap the system. So we don't really know the real consumption, okay? So that's the real problem, okay? And this happens in India, it happens elsewhere, right? So, and then there's this whole problem of regional development, which is a real problem, right? So in this current crisis, much of what is provided in subsidies and so on is happening in and around Colombo, which is good for the capital city, but it's not reaching the other parts of the country. And so the only thing about the universality is that you'll ensure district-wide distribution of this, which is not happening at the moment. And you would ensure at least there is some possibility. So the helicopter thing, I agree, Sharmini, is not a good thing. But the current Samruddhi program, I think, has a lot of people in it which are, political hacks. I mean, this is a sad problem, right? A lot of the people are not getting. So it's a really difficult issue. And I think we should probably have a seminar on targeting versus universality by itself. And I think that's very important. But I just wanted to kind of point out issues of that Verite study, right? Because electricity is stolen. Let me just talk briefly on China, where I have actually done work before on this whole debt trap story, which, I mean, we aren't in a Chinese debt trap in the sense that some scholars from India and the US and others have argued that China has the largest share of our debt and then forces asset transfers across. And it's a moot point as to whether the Hambantota Port Agreement is a lease or it's actually an equity transfer. It's actually a lease, 99 years, and Sri Lanka technically can buy it back if it has the money. Okay. The problem with China is that China is not willing to be helpful with our debt issue, and they are not even coming to the table, as far as I understand it, from people close to the process. And that has put a lot of pressure on Sri Lanka on the geopolitics. And we've got the, Yuan Wang 5 incident, where the spy ship came, with permission, and then permission was withdrawn and the Indians protested. And that means the Indians won't give us any more money in the future, because Mr. Modi himself has been heavily criticized, as you know, Nasser, in the Indian press for helping Sri Lanka. Why do you help them when they're in the Chinese pocket? That's what I read in the Indian press. So Sri Lanka has got itself into a real mess with China, right? And the heart of the problem is going for infrastructure loans at 6%, as was in the case of Hambantota, in province Hambantota, which has no traffic flows. This promise of, being close to the sea route, which has not materialized, right? So I think China, hopefully, will come to the table under Japan's sort of suggestion. And one hopes that in the East Asian context, there'll be some storyline where China worries about the reputational risk of Sri Lanka going further under and decides to come into some story. And maybe the diplomatic answer would be to make China a co-chair of this debt discussion story, which Japan is supposed to lead. And the Japanese, I understand, this is one story, and God knows if it's true, understood that they were going to be the co-chair of the Chinese process and of the debt restructuring process by reading about it in the press. So it may be that our own diplomatic efforts have not been so good, but I think inviting China to be a co-chair of that story may be useful. And, we have examples of Zambia where China got involved and forgave some of the debt and so on. And hopefully they will do that for us for those grounds. So let me just stop there. Thank you.
Thanks for that, Ganeshan. Very, very interesting. So I think they're an important player in this whole process. Nilanjan, can we have the sorry, Anush, please.
Yeah, I think I'd pick up on your question.
Anushka, sorry to interrupt you, Anushka, but just after you finish, can I just come in with some questions that have come in? But please go ahead.
So on your point about institutional reforms and institutional quality, I'd point to three things. One, it's worthwhile starting with some good news. And the good news is that because of the edge to which we took the economy and how so many policy missteps contributed to the current crisis, there is a heightened public interest and awareness around the need for better quality institutions and accountability. I remember writing a piece when Sri Lanka graduated to upper middle income status, because there was all this hype about the optics of being in upper middle income. And we forgot the mechanics of what it takes to stay there and grow in there. And one of those things for that middle income transition is better quality institutions. Now, I think there's a recognition of that we've never seen before. And you see that in the parliamentary oversight committees, huge public interest in it, opposition politicians taking an active role in the Committee on Public Finance, Committee on Public Enterprises, media coverage of those proceedings, public officials, feet being held to the fire and grilling for the first time. So I'm optimistic a little bit on institutions in parliamentary oversight bodies as institutions. The second is around things that aren't working so well or haven't. Policy decision-making bodies as institutions, right? So for example, the way in which the agrochemicals ban, which had a huge impact on the economy for 2 years, the way in which that policy was informed. It was informed by inputs from pediatricians and Buddhist priests rather than PhDs in agriculture or farmer groups. And that was just a symptom of a larger problem in Sri Lanka about the lack of consultative, decision-based, evidence-based decision-making. And I think the institutional decay that has led to that needs to be reversed. And that's something we haven't yet seen happen enough of. And finally, I think on institutions, Sri Lanka has too many mediocre public institutions delivering too little impact. And the ones that are crucial to deliver impact in health, education, are severely underfunded. So we have this issue where, for example, we have entrepreneurship development state institutions with a network of 100 officers around the country, staffed by university graduates who have no real-world experience, and those are stuffed with political appointees. We have institutions like the Export Development Board and the Board of Investment established with very good acts 20, 30 years ago. They were cutting edge in 1979 and 1990, but not reformed ever since, and delivering very little impact in terms of exports to GDP, export-oriented FDI, tax holidays being granted without accountability. You know, Sharmini mentioned the SDP Act. I mean, the SDP Act, if you look at all of the projects that have been granted under it, the total number of tax holiday years comes to about over 200 years combined. And that's an incredible tax expenditure, right?
Yeah.
So I would point to those three. There's good stuff happening on the parliamentary oversight institutions, but a lot more to be done on strengthening institutions that in terms of decision making, and also reducing the number of institutions or reforming them to actually deliver impact.
Yeah. So clearly there's a huge agenda there. Back to you, Nilanjan. Nilanjan, he wanted to raise some questions. Are you there? Nilanjan?
If I can just come in, we are sort of running slightly short of time. So there are three questions. They're all from the same person. I'm going to ask, there are no names, so I'm just going to read them out, and someone can offer to answer them. The first one is asking essentially, well, let me read it out. Half of Sri Lanka's external loans are to private creditors with high interest rates who took risks for profit. Shouldn't odious debts taken by corrupt governments be cancelled and not burden ordinary people? So it's essentially, this is a conversation that has happened even before the event, and I've got some emails to this effect as well. But essentially, it centers on the whole idea of the people, the common people, having to carry the burden of errors done or mistakes done by governments and the governments and the individuals involved who have since gone. So, anyone want to answer? Should we go backwards now? This is a moral question. So shall we go Ricardo, Ganesh, Sharmini,
yes.
Anushka?
I'll be very short. First, let me just clarify relative to the discussion in the previous round that what I meant by untargeted transfers, the key is income transfers as opposed to, Sharmini noted, price subsidies, energy subsidies are untargeted, but they're not income transfers. And I started my intervention by saying that price distortions are indeed both fiscally as well as in terms of economic efficiency very dangerous. And also to be clear, I would love not to have untargeted income transfers. And if you think that it's possible to do them, absolutely go to a targeted income transfer right away. I was, though, particularly aware and sensitive to, as Anushka was noticing, the very dire problems in nutrition in some sections of society and the urgency to reach some assistance to those people, and therefore willing to compromise to some untargeted income transfers, not price controls or other things. And I think the transition from untargeted income transfers, where essentially you may call them cash transfers if you want, that transition from those being broader to being narrowed is much easier than, although experience is quite limited, but at least some experience has shown that it's much easier than to go from price supports and provision of others. But absolutely, I could not be more supportive to the idea of targeted income transfers that are as limited and targeted as possible, as long as they respond to the emergency that Anushka was mentioning. On the odious debt, I think this is a very long discussion in international finance that has been going for a while, since where do you draw the line? What is truly odious and what is not? For all purposes, Sri Lanka has had free elections. Again, you can argue how free they are or not, but the governments were elected by the people, and assume that's in the name of the people. And so I'm not sure Sri Lanka would really qualify as much as many other, or there's many other countries for Sri Lanka that would qualify under the criteria of odious debt that was truly incurred against the will of the people. Having said that, following really Nilanjan's request that we are practical in the session, I think the chances that odious debt would be cancelled for Sri Lanka in the next few months are virtually zero. It is a controversial topic in international finance and international law. The chance that this will be changed in the next 3 or 6 months is extremely low. And as I said, even if it was in theoretical discussion, I'm not sure Sri Lanka would be number one on the list for this to happen. So as much as I am sympathetic to the idea and the concept, I think the likelihood it will happen is very low. And so trying to be more practical, say, in this session. Thank you.
Ganesh, briefly.
Sure. So there are two processes ongoing in Sri Lanka and abroad to try to hold people accountable for the economic mismanagement. The first is there is a court case which is named, I think, 39 people, including the former president, prime minister, and former central bank governor and others. And that's kind of supposedly going through the system. And then on the human rights issue, there is an extension to economic crimes that have been put in with possible sanctions. And we don't quite know where all this will go in terms of processes. But as Ricardo mentioned, elections, I think, are really the important area. And one hopes that the people of Sri Lanka will recognize what has occurred and will vote accordingly in the future. And I think that's all one can say on these issues of domestic accountability and international accountability.
Thanks. Sharmini?
Look, my take on this is that when you restructure debt, you are asking for a reduction in the repayment. So that is it's a debt, it's burden sharing. So, yes, it's true that some creditors certainly got very high interest rates and they were charging us a risk premium. Now the risk has materialized. So that's the logic of asking them to restructure the debts. But I like Ricardo, I don't think you can just unilaterally repudiate it. First of all, you'll be shooting yourself in the foot because you'll be cut off from financial markets for a very long time, and that wouldn't be wise. And secondly, it's counterproductive and it's hard to justify. We elected these leaders. People voted people in. So we have to recognize our responsibility. But I would say that we should focus on the restructuring and getting a good deal out of the creditors. And that is a debt reduction, not debt repudiation, but debt reduction and burden sharing. Yes, that should be possible.
Anushka.
Nothing much to add beyond that, Nilanjan. I think the point is clear that these are debts that Sri Lanka took on, commercial debt. We didn't put our house in order when we graduated to take on this type of commercial debt. And, the same way that the private creditors who took on risk looking at Sri Lanka's risk rating, looking at Sri Lanka's weak fiscal positions are now having to take potentially a haircut, face value haircut on their debt. Sri Lanka, it's a moment of reckoning also. So I think, as Sharmini pointed out, it is burden sharing, and Sri Lanka did actively, knowingly take on this debt. Unlike some of the bilateral debt where the contracts are opaque, where we didn't know what we were getting into, these are commercial contracts, international sovereign bonds and syndicated loans. So I think we have to be very clear in that. And I would say, if we want, in terms of taking a harsher approach, perhaps an unconventional approach, I think it's important we look at some of the opaque bilateral debt where the Sri Lankan people didn't know a lot of what that was. And we also don't know the nature and relationship of those contracting. What are the intervening political and informal forces that were at play in taking on that debt? So I think that is probably where we need to focus more on this point about accountability going beyond the contract.
Thanks, Anushka. Nasser, I'm going to ask you as well if you'd like to say something about this whole question of whether or not debts should be cancelled or taken by governments, et cetera, et cetera. But before I say that, because we have about 5 minutes remaining, there is a question that's just come in, which is interesting. It's not a question that is really about economics or fiscal matters, and that is what our event this afternoon is focused on. But it's a question that comes up often and comes up quite vocally, especially when countries are in the kind of crisis that Sri Lanka is at the moment. And the question is actually, at least to someone like me, essentially a political one. It's a decision about politics. But as we've been talking about, and I mentioned quite clearly in the introduction, the economic crisis has not been without an attendant political crisis as well. And the question is this: is there anywhere in the budget where significant cuts can be made without harming the bulk of the population? For instance, in military spending. So it is really, this is a political decision because it's about defense, it's about military spending, etc. But it is in many ways the flip side of the earlier question, which is, how can we reduce debt without it having a dramatic impact on the common people? And could we find ways to reduce budgetary spending, and one of them would be military spending, but then it also then opens up various other questions of national defense and security, etc. Nasser, did you want to say anything about the question about the cancellation of debts?
No, nothing further to what has been said earlier. It would be
okay, great. I'm afraid then that I am. We're very close to ending now. So thank you very much, everyone. To the person who asked 3 questions, I at least posed one of your questions. So I hope you will forgive me because we really are running out of time, but you have 2 other questions which are visible on the YouTube chat box. And I asked the question that I personally thought was the most important and the most morally bearing question, which was the one about whether or not debts taken by governments, by corrupt governments, should be, or governments deemed corrupt, should be cancelled or not, and why common people should carry that on, if that is fair or not. It is now my very pleasant duty to thank all of you, the audience who have been watching. And I say this at the end of all the events I do, every week that I do. And this is for our experts and panelists, that I do want to thank all of you individually, Anushka, Sharmini, Ganeshan, Ricardo, and Nasser as well. We can't do these events unless you give freely of your time, of your intellect, with the generosity that you do. But believe me, it really does make a difference. The number of people who watch our videos after the event has happened, the number of people who write to us. So thank you very much once again, Anushka Vijayasena, Sharmini Coorey, Ganeshan Wignaraja, Ricardo Reis, and Nasser Manji. Thank you and goodbye.